Welcome, everybody. Tonight we've got a guest speaker, Rob Booker, who is going to give us some background on the trading over in the Forex area. He's been trading since 2000, and he's worked as a chief financial analyst for a major Forex broker, as well as managed money as a commodities trading advisor. He's also the author of Adventures of a Currency Trader. So it'll be very interesting to see his perspective, and from the feedback I've gotten from people that work with him, he'll give you good, high-quality stuff. Look at it and see how you can integrate it into your own trading. Rob, welcome, and we'll let you take it away.
Thanks, Steve. I'm so happy to be here. Welcome, everyone. Once again, my name is Rob Booker. It's a pleasure to meet you, and I am the host of the Traders Podcast. I'm the author of Adventures of a Currency Trader, and you can find me on Twitter. Just to start things off tonight, I think you'll find that I'm ultra accessible. If you have questions after the broadcast, after we finished here, you can find me on Twitter, @RobBooker, and I'll give you a variety of places that you can find me on the web and ask me questions about what you learned tonight. I want to remind everyone, Steve is generously recording the entire presentation tonight, and I've also kept a really nice, clean copy of all of the slides that I'm going to use tonight. And, of course, they're all available to you, and at the end of the presentation this evening, I'll not only share with you a link where you can download those materials, but I'll also share with you a link tonight where I'll be holding a bonus question and answer session at the end for about 15 minutes, where I actually share some charts from the live market and show you some additional examples. There's always questions that pop up after the presentation is complete, and you kind of wish that you had thought of the questions originally. So in case that happens and you didn't get a question answered that you really were hoping to have answered, I'll be on tonight even in a bonus round, and I'll show you all about where to get that information and how to contact me at the end of the presentation. I've been trading since the year 2000. I was the former chief market strategist at Interbank FX. It's a major Forex broker located in Salt Lake City, Utah, which is actually now owned by TradeStation. And I specialize in uncovering some of the mysteries and myths and some of the things that people don't really talk about with respect to trading. There's so many opinions flying out there in the market all over the place. There's just opinions about what you're supposed to do. You're not supposed to trade this session. You're not supposed to trade this financial instrument. And you're not supposed to trade during Fridays, and you're not supposed to trade before earnings, and there's all kinds of myths and mysteries and secrets and all kinds of stuff that people talk about, and I'm really not a fan of that BS. I'll tell you about my story really quickly here, and then we're going to jump into the meat of the presentation, and I have a whole pile of stuff to share with you tonight. I started in the year 2000 as a trader. I graduated from law school from the University of California in 1998. I was to enter a PhD program in Washington, D.C. soon after I graduated from law school. But on the day that I was supposed to start my PhD program, I got a message from the director of the program saying that they had overbooked the program, oversold the program, to use a technical term from the world of trading, and I didn't have a seat in the program anymore. So I started a business with a friend of mine, and essentially, to make a long story short, we made a whole bunch of money, but we lost a whole lot more money than we made. And in the year 2000, I found myself needing to work. I didn't want to practice law, and so I called up a friend at Bear Stearns, of all places at the time, from San Francisco, California, and I said, listen, I need to make a whole bunch of money in a hurry. I lost a bunch of money in a business. My friend has left the country. He's living in South America now. I have a bunch of business debts. Got to feed my family. I got to get out of this situation, and I certainly don't want to practice law. And he said, well, whatever the heck you do, don't look at currency trading. Don't look at the world of foreign exchange. And from that moment in time and forever onward, I've been the kind of person in the markets that doesn't want to hear what everybody else usually says, the old advice about it's too risky to do this. You ever heard that trading is too risky? Well, I heard a lot of people in the real estate business in the mid-2000s tell me that I ought to get out of the business of trading because real estate was always going to go up in value, and even if you got stuck with a bad investment in real estate, you could always just hold on to it and get out of it. And there's a whole lot of people that wish they were traders and they could have just exited the trades that they were in. I think a lot of the stuff that we hear about the markets is just a bunch of BS. It's just a bunch of people whining or complaining or talking about what they wish they knew. Well, I'm here tonight to tell you what's worked for me over the last 12 years. I've been a money manager in the world of currency trading. I've traded stocks, I've traded futures, I've traded Forex. And everything that I'm going to share with you tonight comes from my personal experience and the things that I've done that have worked. And most importantly, I never want you to miss an explosive move in a stock or a futures contract or a currency pair ever again. I know you've thought this because I've thought it too. You watch the market, you wait for the move. You wait for the move. You know it's coming. You wait for the move. And then somehow you go to the bathroom, your aunt calls you on the phone, you step out, you got to go to work, or something happens and you miss the move. Or at worst, you got your finger over the trigger button and you don't pull the trigger on the trade. Well, I never want you to miss those kinds of moves again. But I also don't want you to learn a trading system that's part myth and part objective rules and part discretionary, and you got to make up the rest of it for yourself, and you got to figure it out. And I'm going to tell you a little bit of it, but I'm not going to tell you the whole thing, because if I tell you the whole thing, then and blah blah blah. Well, let me tell you. Tonight I'm going to give you an objective, rule-based system that you can implement on any financial instrument, on any time frame chart. And it's the whole system. It's not part of the system or just like a little piece of it. It's the whole darn thing. Because why would you want to learn just part of it? That wouldn't make any sense at all. And I also want to dispel one more myth before we begin. There's a myth out there in the market that if I'm so good at this, or if I've written a book, or if I've made a bunch of money from trading 60 standard lots in the currency market or managing money, then why the hell would I ever want to teach a bunch of people how to trade anything? Why in the world would I want to have anything to do with regular old retail traders after I've been so important and done such a great job in my own life? Why would I ever want to do that? Well, let me tell you exactly why I would want to do that. Because I was in the position of just starting out, and then I was in the position of having done this for a while, and I was missing out on the huge moves. And then I started to believe that I really couldn't trade for a living. I started to believe all that BS that everybody was telling me. Listen, it's too hard, and nobody makes any money, and the broker's the only one that makes any money. And I made a decision for myself that if somebody out there was doing it, anybody at all was doing it, one person even, then I was going to take a crack at it. And I wasn't going to give up on it, and I wasn't going to quit just because somebody told me it was difficult. And I certainly wasn't going to turn around and go work in a law firm and argue with people for a living and bill them by the hour and then find myself standing on the ledge of the 49th floor of 1 Sansom or 44 Montgomery in downtown San Francisco thinking, this wasn't worth it. I wasted all of my time. I didn't get to spend any time with my family. I didn't get to spend time with my friends. I never got to take a vacation. And some jerk-off partner in this law firm is running the whole thing into the ground, and I've got no say in the matter because I don't really command my own future. Well, that's why I do this, because tonight I want to make it really clear. I am most definitely not the most important person in this webinar tonight. I've made a lot of money, and I've lost some money in the markets. I've learned a lot of things, and I have been on a journey that a lot of people want to be on. But let me tell you the truth. I'm here for you. I'm here because this matters to me, and there's no people in the world that I like better than traders. I love traders. There is no group of people on the world, save probably the individuals that serve in the military, that are willing to put it on the line every day, that are willing to actually every single day face their worst fears. In the military, you face your worst fears about life and death. When you trade, you face your worst fears about supporting yourself and supporting your family every day. When you work in a cubicle, you don't worry about it. You get your paycheck, you go home. You leave early, you get a little drunk at lunch, and so forth. But traders, they are constantly improving. You and I are the type of people that don't settle for second best. We don't settle for mediocre, because mediocre doesn't do the trick here. And we wouldn't all be here tonight if we weren't all in the same boat trying to get better at what we do. That's exactly why I'm here. The Ichimoku trade is based on the cloud system that comes out of Japan. I've sold a ton of books in Japan. Actually, I'm not very popular in the United States, but I have a huge thriving business in Japan. And I published 5 books in Japan, and I went to Japan 4 times over the last 4 years, actually 6 times in the last 4 years, and brought back with me some of the techniques that I learned from the Japanese traders that use the cloud on a daily basis. Now, it's funny, you usually see people bringing back candlesticks. And it's odd that I'm here with Steve tonight because I don't usually have this kind of thing. Steve brought back candlesticks, and over the last few years I brought back some techniques from using the cloud. And as you'll get to know from me, it wasn't enough for me to just bring back the cloud. I had to change it up, turn it around, make it simple to follow. What I want you to know tonight before we begin and look at the Ichimoku cloud is that it's an enjoyable, entertaining way to look for explosive moves on the charts. It doesn't matter if you look at Forex. It doesn't matter if you look at stocks. It doesn't matter if you look at futures contracts. I'm going to share with you stuff tonight that's going to work across the board. But most importantly, if you follow stocks, and I'm guessing that a significant number of those of you that are here tonight do, you're going to look for movers, the technology stocks, the energy stocks, the alternative energy stocks, the stocks with market caps of plus 1 billion. You don't want to trade these small ones, or you could trade any currency pair or futures contract. You want to trade something that moves, and you want to trade something with volume. You want to trade something that moves a bunch. So tonight, right now, as we just are on the verge of getting started with this whole business, I want to ask a couple of questions. Number one, what do you trade? You can tell me stocks, futures, Forex, or all three. Just type it in the box. Love to hear from you in the general chat window in this webinar. I would love to hear from you stocks, Forex, stocks, futures, stocks only, stocks, futures, and Forex, stocks, FX. Wow, tons of answers. I love the answers. Keep them coming. Mike C., Darren, John, Mark, Rob, Mike, Gene, Bruce, Rob, Alan, John F., James C., Mary, nice to see you, Mary. Sean, great to see you here. Douglas, Raina, nice to see you here. Lenny Reynolds. If I could rename myself, I would rename myself Lenny Reynolds. Next, tell me where you're from. From all over the world, I'm supposing, but give me an idea of where you're joining us from tonight. Would love to have you. Oh, man, lots of people from all over the world. Bangkok, Virginia Beach, Ireland, Seattle, Rhode Island, Salt Lake City, New York, Jacksonville, New Jersey, Boca Raton. I think Saddam Hussein's actually living in Boca Raton. Great to see you all here. Bob Spears, great to see you. Hi, Bob. I recognize a few of those names. All right, well, thanks for telling me where you're from, Perth. I want to come see you. Is this relevant, Gold Trader? Of course it's relevant. I care about you. If you weren't relevant tonight, Gold Trader, then I wouldn't be here. If where you're from or what you trade wasn't relevant, then I would have no business being here at all. If I didn't care about you enough to know where you were from or why you were here tonight, then I would have no business presenting in this webinar. And without further introduction, let's get into it. I'm going to say this about 563,000 times tonight. I'm going to give you the settings for the Ichimoku Cloud 9 million times because it's the number one question I get in every webinar that I ever do. What are your settings, Rob? Those are the settings, 18, 52, and 104. I will share those another billion times. You're also going to need on-balance volume. I know Steve's not necessarily for or against anything that I'm personally going to do, but Steve doesn't necessarily always look at volume. And Steve's got it right. The candles will show you where the volume is. That's absolutely true. But I also use it even though Steve says that. And that's the beauty of doing one of these joint webinars. We can have different perspectives and still come to similar conclusions. On-balance volume measures buying and selling pressure as an indicator, a visual indicator on your screen. And it adds volume on up days, and it subtracts volume on down days. It's available in every major charting platform, Fidelity, Active Trader, TD Ameritrade, any online web-based charts, and if you're a Forex trader, MetaTrader, TradeStation, or anything else. Dave Crook is mentioning that there's no volume in Forex. Ba-ding! What a great comment, Dave Crook. I have about 900 presentations ready on the subject of volume in Forex. But Dave, just because you mentioned it, I'm going to tell you a quick story. When I was at Interbank FX, which was a broker that had about 30,000 customers at the time I was there and was producing about $100 million in trading volume on a monthly basis, I studied volume. And the common knowledge, once again, Dave, this is exactly why I'm here, the common wisdom in Forex that volume didn't matter in Forex because it's tick volume. It measures the number of trades taken in any single given candle, not the actual number of lots trading hands. I did a side-by-side comparison on volume, the actual trade volume, the number of lots traded on a side-by-side correlation in Microsoft Excel over 10 million trades over a 3-year period of time, and guess what? The correlation between the two was so significant as to be practically indistinguishable and it busted the myth that volume didn't matter, and it was a side-by-side comparison from the inside of a Forex broker. It is a total myth, and you can even still to this day talk to brokers. I was at the firm, and I would talk to the executives at the firm and say, well, volume doesn't matter. And I would show them the data, and their eyes would pop open out of their head, and they'd say, wow, this is a great opportunity. And, of course, by that time I had already quit, gotten out of the cubicle, and gone back on my own and rescued myself from the grasp of the cubicle. Here we go. On balance volume, Ichimoku cloud, and this is why we trade. This very next slide is exactly the reason why I trade. I love the big move. I love it. I live for the move. I love this feeling. They often say that most people fear or dislike losing more than they even enjoy winning. But let me tell you something. I enjoy winning more than anything. And more than even enjoying winning myself, I'll tell you what I like a lot more. I love it when you and I talk on Twitter, and we're talking in the middle of the day, and you are showing me a chart that shows that you took a trade like this. That is exactly why I'm doing this. That is the greatest feeling in the world when not just one of us gets through and breaks on through to the other side, but most of us break through to the other side. They say that 95% of people that attempt to trade for a living fail. Well, let me tell you why. Most people that trade for a living will get out on the move before it is even near to be done. And tonight I want to share with you some techniques that I have recently updated and redeveloped specifically for a group of traders that would be here tonight that do a nice mixture of stocks and Forex, and that's what we're here for. Here's what I do. I love traders. I love blowing up myths. I love uncovering what really works, and I love speaking to you directly and as an equal. I don't think I'm better than you. I don't think that I've made more money than you. I don't know anything about you yet. And I think you have just as much of a right to be successful at this as anybody who works on Wall Street. And judging from the morals and the track record of the people that work on Wall Street, I would say that there's a chance that you deserve it more. I was on a tour of the trading desk at a major Wall Street firm. In fact, it was Deutsche Bank in the year 2007. And I was touring the commodities and futures and Forex trading desk at Deutsche Bank in New York City. And I was touring it with the global director of commodities and currencies trading at Deutsche Bank. And we were on the way out, and she said to me, Rob, it was great to meet you today because there's this thing that goes around on the floor. We laugh about it all the time. We laugh at people who trade from home. We laugh about it. We think, man, I can't believe that people really think they can trade at home. And I said, you know what, Betsy? After having taken a tour of the floor here of the trading firm and watching what you do and all these people jumping up and down on these ergonomic chairs and playing poker with each other and trying to figure out the Black-Scholes formula out of a textbook, I find it difficult that anybody here makes money. And it turns out, folks, that nobody there was making any money, right? That's the whole problem. All right. In case I die before 9 p.m. tonight, before we finish this webinar, so if a meteor hits me, falls out of the sky. We had an earthquake here in Southern California last night. So in case I die before this whole thing is over, there is one thing that you can do right now to make a massive, immediate improvement in your trading, even if I drop dead in the next 10 minutes, which I'm not planning on doing, but nobody knows what's going to happen next. And here it is. Well, here's the meteor first, and then I'll show you what's going on next. So in case that happens, which I don't want to happen, but in case that happens, here's what I want you to do. I want you to slow everything down. Everything in life gets better if you slow it down. If you're a comedian, if you slow down your delivery, you are a trader and you slow down your indicator, it gets a little better. If you change the settings on your favorite indicator and you increase the setting by 2 or 3 times and you try that tonight, you're going to see something magical happen. Even if I get hit by a meteor and we don't get to talk any further than we get to talk tonight, let me show you the next slide. Remember, all of the slides that I share with you will be saved as a PDF and as a PowerPoint presentation and in a zip file, and will be available at a link that I will show you at the conclusion of the webinar tonight. No fear. It's also being recorded, which is totally awesome. Here's the MACD. On the top of the screen here, you see the MACD set to 12, 26, and 9. That is the boring old settings that Gerard Appel in 1792, when speaking to George Washington and General Custer and Abraham Lincoln and Leonardo da Vinci, decided should be the settings of the MACD. And not one damn person for 1 billion years afterwards, since the Jurassic Age, ever thought to change one smidgen of anything on the MACD. And so you see on the top the MACD, as this Citigroup stock is rising, the MACD just keeps jumping upward. So MACD it's making peaks here on price, and the MACD's doing all these crossovers here. So I'm going to readjust my chart here. You can see a crossover here, you can see a crossover right here, and you can see a crossover right here. And the MACD is crossing over, these trigger lines are crossing over as if we're done with the upward move in the trend. Why? Because the MACD settings that were first invented 30 years ago are now known to everybody. Here's what you do. Take your MACD and slow it down. In this case, I slowed it down. I multiplied each of those settings by 2.5. I came up with a MACD that shows 30, 65, and 23. Let me tell you, there's not a person on the planet Earth that's going to look at the MACD settings of 30, 65, and 23. But guess what? It gives one crossover at the end of that trend, and you got 3 on the upward settings. Now, maybe this is the well-placed example. Maybe I just showed you the one time that it worked. Well, that would be pretty idiotic of me, because you can go home tonight and you can look at all the examples on the charts in front of you. So take a look tonight. Slow down your favorite indicator. If you like the stochastics, slow it down. If you like the RSI, slow it down. If you like the CCI, slow it down. If you like the NBC, the CBS, the TNT, the TBS, whatever you like, slow it down. You like the Bollinger Bands? Slow them down. You like the envelopes? You like the alligator? You like the Williams? You like the whatever? Slow it down. You will be shocked to see that you can stay on the same time frame chart and you can see a smoother signal, cut out some of the noise, and you get the real story on a financial instrument. It doesn't have to. It could be a stock, it could be a currency, it could be a futures contract, it could be a Beanie Baby. It doesn't matter. It could be an eBay auction. Let's look at Google. So I'm going to share with you just a zillion charts. And I'm going to share with you a trading methodology complete from start to finish. I'm going to show you where I get in. I'm going to show you where I take a stop loss. I'm going to show you where I have a profit target. And I'm going to show you why I take the trades in the way that I do and what I think the story is that's being told as I take the trade. And here are the settings. I've mentioned before, I'm going to share with you these settings 4 billion times. I'm going to start things off, as I mentioned, showing you Google. Google's a great example of a stock that moves a bunch, has a nice amount of volume, and can have a movement that it moves a whole bunch within just a few days. But we'll also look at Apple, we'll look at Cisco, and we'll look at all kinds of other financial instruments tonight, but we're going to start things off with Google. Remember, your cloud settings are 18, 52, and 104. If you've never used the Ichimoku cloud before, here's what it looks like. I draw an Ichimoku cloud on my charts simply by adding the indicator to my charts. I got these charts from tradingview.com. It's completely free. You could get these on eSignal. You could get these on any major or minor charting platform in the world. And all that I leave on the screen is the cloud itself. When I went and spoke to people in Japan, and I talked to traders who worked at trading desks and who actually traded from home, and people who'd been using the cloud for 20 or 30 years, I found that over and over and over again, the same story was being told. They didn't really pay attention to the moving average type lines that surround the cloud, but they focused on the cloud itself. The Ichimoku cloud is simply an indicator that runs through the middle of your screen and will actually plot movement forward on the screen, meaning it will actually plot an area ahead of where price is, and this area does not change. That's an important concept. Even when price changes, if it drops, this stays right where it is. Even if price goes up, this stays right where it is. It is not dynamic. This means you can plan trades on the cloud without worrying that it's going to move around. The second thing that I want to share with you tonight is that I drew a trend line on an indicator. This is on balance volume on the lower part of my screen, and I drew a trend line underneath the upward movement on balance volume. And we're going to just drop right into taking a bunch of trades, and I am super excited to hear your questions. The Ichimoku cloud is a standard indicator available in the custom indicators of MetaTrader for Forex. You can download a free, if you just do a Google search for TradeStation, you can just search for Ichimoku Cloud TLD and every other major charting platform. And if you want to follow along tonight, you can add it to your charts on tradingview.com. Free charts. Stock Charts has it. Everybody's got it. Every major charting platform has it. It's just a regular indicator that nobody in America or the West ever pays attention to. It's completely ignored. Let me share with you how a trade is produced from this methodology. I drew a trend line underneath the upward movement on a stock as it rose. This is Google. So as Google increased in price during the trend in 2006, I drew a trend line underneath price. And for the record, this is the daily chart. I'm going to look at every single instance where this produced a trade over the last 3 or 4 years. You're going to see every single one of these without skipping examples or jumping around and showing you only the best ones. The entry came when the candles fell below the trend line and hit the top of the cloud. That's in this pink shaded area that you see on the chart with the green arrow pointing to it. When price moved all the way through the cloud and dropped to the bottom of the cloud, I moved to break even. What I need in order to take this trade, then, are 3 major things. I need the candles to drop below this trend line, hit the top of the cloud, number 1 and 2. And I need on-balance volume to also break below a trend line. And this is going to be an important confirmation to the trade. It's going to keep us out of a lot of bad trades, and it's going to put us into a bunch of really good ones. Now, in this example right here, we dropped below the trend line to the top of the cloud. This shows us that it really means business. We didn't just break the trend line. We broke the trend line and hit the top of the cloud. That came at a price of about $400 a share. The second thing that it did was it dropped to the bottom of the cloud. By the time it dropped to the bottom of the cloud, it moved to $360. That's a 10% gain in 4, 5, 6, 7 days. Now, I don't know about you, but I don't know a lot of people who do a 10% gain in that stretch of time. At that moment in time, the trader has an opportunity to do the following. You can either move your stop loss to break even and ride it for more, go all the way down to $340, which is $60, which is even an increase of another $20 per share traded. Or you can get out of the whole trade. If you are an options trader and you bought a put when it hit the top of the cloud here, if you bought a put at that time and rode it for 7 days, you bought a put that had an expiration of 60 days, and in the first 7 days the stock dropped 10%, you're going to have a massive increase in the value of that put because of the volatility and because of the movement. And that is a powerful trade. Now, what if you're a student of Steve's? And what if you've got another little quiver, another arrow in your quiver, something special, something that he could teach you? What if at the top of this movement up here, you saw a candle pattern, a reversal candle pattern, a bearish engulfing candle surrounding a doji at the top there? What if you saw that? You'd be even earlier on this move than I was, but you'd have the bottom of the cloud to help you as added confirmation, and you would have, in my opinion, you'd have a blockbuster opportunity to make some money in the market where most people don't even see it coming. When this happened in 2006, there wasn't a human on the planet that didn't look at this as a giant buying opportunity because no one could touch Google. Let's look at the next opportunity that came after that. This is actually, I skipped forward. Some of the charts are out of order. This is in 2012 when ExxonMobil's trading at $88 a share. We break below the trend line on ExxonMobil. This is the daily chart. We break below the trend line. We break below the trend line on balance volume. So we have 2 reasons for an entry. But we don't hit the top of the cloud, so we miss all this noise up here at the top. We miss all of that mumbo-jumbo crud noise. We don't get any of it. We don't have to bother with it. All of this right here. We don't trade that. We don't trade this. We don't trade this. But right here when we hit the top of the cloud, that's the go time. That's the third point of confirmation. We break below the trend line, number 1. We break below the trend line on balance volume, number 2. We hit the top of the cloud, number 3, and boom, it's go time. We trade that at about $85 a share, and just about, I would say, it's about a month and a half later, we drop 10% on that stock, and even further than that. And once again, we get a 10% move on the stock, and this is ExxonMobil. This moves at the speed of a driver on the streets of Sun City, Arizona. This does not move quickly. This is ExxonMobil, and it still produces a 10% gain, even though it's one of the most boring stocks in the entire world. It's not boring, of course, if you're a small animal living on the shores of the Alabama Gulf Coast. coast. All right, NASDAQ, Google, daily chart. Here we go again. Let's start looking at more charts from 2006. We break above the trend line here. Step 1, top red circle. We break above on-balance volume. That shows that the volume is switching. That shows us that volume is increasing in the upward direction, that the buy volume is above the sell volume. That's really important, that the buyers are outnumbering the sellers. Steve can tell you that with a candle pattern, and I can tell you that with volume. It doesn't really matter how we tell it to you, but that's what happens. We buy it when it hits the cloud, and immediately we start moving up. If we buy it at $377 a share, it is approximately a week and a half to 2 weeks later, from $377 a share, let's just round that up to $380 a share, we go $60 higher on a $380 stock. That's 15% or so. That's, once again, 15% in 2 weeks. That's how far we move. The break-even mark's going to come if we get 5 or 10% of a gain on the stock, and then we can ride that for as long as we want. What are my settings on the cloud? 18, 52, 104. Nothing. I will say these settings over and over again tonight, Steve, but that's a common question. What are the settings on the cloud? Don't use the standard settings on the cloud. It's not going to produce the same signals. It's going to produce all kinds of whacked-out signals that we don't want to take. Steve, any big, interesting, amazing, ridiculously awesome questions come through so far? I will take that as a no.
No, you're getting a lot of good questions. Can you see them?
Yeah, I can see them. They come through sometimes so quickly.
Oh, okay.
Right. Okay, Doug
we'll says, for example, if you want to say afterwards, we'll just keep scrolling until you get, or let them re-ask the question at the end.
Okay, that is fantastic. Any questions that come through about Greece and the markets for Sunday, I am going to do a special, like I said, a special bonus presentation at the conclusion. It's a Google Hangout where you see my webcam. We'll talk face-to-face, and I'm going to talk specifically about the market on the weekend and give you a viewpoint about that as well. This indicator is available for every major charting platform. If you have trouble finding it, I'm here to help. Just hold your horses. Don't get excited. I can help you get this indicator on just about every major platform that you can possibly think about doing. I've been using it for a long time now, and I know where you can get this indicator for your platform as well. All right, NASDAQ, Google, daily chart, 2006, 2007. There's two examples here on the chart in front of us. In the first example to the left, we break below this trend line, and we hit the top of the cloud. We also, at that time, break below the trend line on balance volume. Our stop loss is going to go above the highs that this financial instrument has made, the highest highs that it made in the midst of that trend, and I'm going to make that stop loss really large so everyone can see it. It goes above those highs right there. We don't hit it. And then we get another trend line break and another break below a trend line on balance volume. And let's say we trade that at approximately $471 a share. We drop as far as $440 a share to the bottom of the cloud soon after. Doesn't take long. That's a $30 gain on a $470 stock. Once again, if you're going to trade an option, it's going to make a big move fairly quickly. And if you're just going to trade it for cash, you're going to short it, you're going to make some money here. Here's another example. Now, this is Google, so you're going to see a lot of examples going downward. You're going to see a lot of examples later on going upward as well. Here's Google. Breaks below the trend line. You can see a gap down. We don't fill the gap immediately. The gap and the volume combine. We drop below the trend line. We drop below the trend line on balance volume and on price, and we have a really, really, really short move. We drop to the bottom of the cloud. We only get from $520 a share down to about $490. That's still $30, and that's not bad per share. And we move the stop loss to break even, so at most we stand to lose nothing. It's a risk-free ride if we want to take that lower, and it doesn't in the end go lower than that. What if you want to take this trade upward? What if you see this giant burst of activity following that move? How would you take a buy trade in that move? Well, we're going to take a look at that, and we're going to see some examples of that in just a moment. But you would drop down to a shorter time frame chart and plan a buy trade on that short time frame chart. Now, tonight we're going to look at buy trades and sell trades. We're going to look at both, so you're not going to be left out. We're going to look at both of them, but want to travel through the story of Google first, and then we'll look at those buy trades as well. Here's an entry on Google from 2008. We break below the trend line. We drop to the top of the cloud at $650 a share, $660 a share. We drop to the bottom of the cloud to move to break even at $610 a share. We've moved $50 on a $600 stock, and then we drop just like a tank. We drop $200 on a $660 stock. We move $230 down. That is a gigantic move, and that's not the end of the move. That is a significant drop, and it works for moves upward, and it works for moves downward. Here's how the trade played out. We got a break below the trend line on price in the upper portion of the chart. We got a break below on balance volume further to the right, and we need both of those. And then we need price to hit the top of the cloud, and that's at about $660 a share. We move to break even when we hit the bottom of the cloud, and then it's a free ride from there. We stand to lose absolutely nothing if we hold on to that trade. We miss a trade sometimes. Sometimes we see a giant move downward, and we don't get it from the daily chart. How do you get this giant move downward? This is a move from 550 down to 300. How does somebody get that move? How does somebody get that move? You move to a smaller time frame chart. With this system, on a stock like Google that has a lot of volume, or Citigroup, or JP Morgan, or Cisco Systems, or Microsoft, or any other number, or Apple, anything with a lot of volume, you drop down to a lower time frame chart, and you trade the break below a trend line on a lower time frame chart. You can use this on a 1-minute chart if you want to use it on a 1-minute chart. And what are my settings for the Ichimoku cloud? 18, 52, and 104. That's the settings on the cloud. The on-balance volume just comes out of the box with standard settings and nothing else. You don't make any adjustment to the standard settings that it comes with. All right. Next we go to Google on a buy trade. So if you wanted to look for long trades, here we are. I have a great question from Peter Williams. Peter, I'm going to get to your question right now. Google breaks above the trend line right here in this area. Now, a lot of people would say, let's buy it right away. Now, I'm not opposed to that, Peter, or anybody else. I'm not opposed to that. It doesn't necessarily have to be the worst decision that you ever made to do that. It's simply an early entry, and I'm going to take a later entry with a little bit more confirmation, and I'm going to get I'm going to get a worse price on my entry, but I'm going to have a win percentage that goes through the roof. My win percentage on trading down here is going to be small. My win percentage on trading up here, excuse me for moving the chart, my win percentage up here is going to be substantial. That's what I want to give to you. I want to give you something that's going to win on a regular basis, that's going to be a consistent producer for you. So we break above the trend line. We also break above the trend line on balance volume. Then we hit the bottom, in this case, of the cloud. Do I wait for a touch of the bottom or a close inside the bottom, asks Peter. The answer is I wait for something to close inside that cloud. I want to be inside the cloud when I trade. This is an entry that comes around $520 a share. When we get to the top of the cloud, we've moved $50 higher for an approximate 8 to 9% gain on this over the course of just about a week and a half. A lot of people are asking, what's the number 26 that's coming at the end of this? It's an irrelevant number, and it doesn't matter, and you can actually ignore it. Some of you will have a variety of settings on your cloud, and I'm going to tell you how to focus on the ones that really matter right now. In your regular cloud settings, you're going to see 9, 26, and 52. Look for those numbers in your standard settings. You want to change those three numbers to 18, 52, and 104. If you have additional numbers that are listed, you can simply ignore them. All right, here we go. Next chart is Google Daily Chart from 2009. We break above the trend line on price, but we don't take the trade immediately. Once again, there's a candle pattern down here at the bottom that Steve could definitely help you. For those of you that are students of Steve, you are really lucky to have somebody that's going to teach you how to identify some of these patterns down here at the bottom, and it makes this even more exciting because you might get an earlier entry on this. We get an entry when a candle breaks inside the cloud, and we know that we've already gone upward on balance volume. That means that the bulls are beating the bears on volume, that there are more trades being processed for buy trades than there are for sell trades, and there's an imbalance, that there's a need and there's a demand for this stock. We buy at approximately $320 a share. We move to break even at $372 a share. That's a gain of $40 on a $330 stock over the course of approximately 3 weeks. That is a spectacular gain. Here's an example of a no trade, and Peter and everyone else, this is why we wait. In this example, Google on the daily chart from June 13th, 2012. Oh, excuse me, I apologize. No, that's not true. It's from, let's see here, July of 2009. Here we are, we break below the trend line on price. We break below the trend line on balance volume, but we don't hit or break into the top of the cloud, and we don't take the trade. Hovey Flurg has done something really marvelous for everyone. If you use NinjaTrader, he or she just posted a link to the cloud for NinjaTrader. All right. Someone said, if you enter early on a break inside the cloud at $330 a share, right here where the green arrow is pointing, your move to break even will be $40 higher. What move to break even means, for those of you that might be wondering, is that's when we have a profit on the trade and we move our stop loss upward. So if we had an original stop loss, let me grab a stop loss line from a previous chart. I'll just redraw one from scratch. Let's say you have a line here that's your original stop loss. If that's your original stop loss on the trade, that's the price at which if it moves below this level, you're going to get out. Once this trade moves all the way up here, you're going to move your stop loss up here so that you stand to lose nothing on the trade and that you only stand to make a gain on the trade. And that's the point. That's exactly what we're looking for. Here's an example from, let's see, 2010. We have a long upward trend on Google. We break below the trend line on price. We break below the trend line on balance volume, and we enter the cloud at approximately $570, $560 a share, and we drop $30. We move to break even. We either take our profits there, or we move upward and we get out at zero. We don't lose anything. Your settings in the cloud are 18, 52, and 104. Any other numbers are irrelevant. So you start with a 9, 26, and 52. Any other numbers are totally irrelevant. Here's Google breaking down again on a trend line. In the middle of the chart here, we see it breaking down again. We see it drop below on balance volume. And we've already moved through the candle. These are the most explosive moves that you can possibly have. If you've already moved all the way out of the cloud by the time you break the trend line and you break the on balance volume, you are looking at a very explosive move of more than 10%. In this example here, we enter on a break of the trend line and on balance volume because we're already through the cloud. We enter at 544. It drops a full $100 on a $500 stock. That's an impressive gain. Here's a buy trade for those of you, once again, that want to buy, not sell. Here's a break above the trend line on price in the top circle. Here's a break above on balance volume in the bottom circle. We take that trade when it enters the cloud at approximately $500 a share. We move up to $515 a share. And we move to break even. And in this instance, Google went up a huge long way. I don't show it on the chart here. But the profit target is open initially. You move to break even, so you stand to lose nothing on the trade. And in so many of these examples that you see over and over and over again, you get to break even. You make 5 or 10%, and you move to break even. You stand to lose nothing on the trade, and you stand to gain a huge amount afterward on movement that continues upward from there. Here's another example. Google making a top up over here and a break below a trend line, but we don't trade it because we haven't hit the top of the cloud. We then break below the trend line again off to the right. We hit the top of the cloud at $600 a share. We move all the way down to $560 a share, so $40 move downward on a $600 stock. We move to break even, and this falls as far as $525, and even further than that I don't show it on the chart. So there's a huge possible gain again on a stock, and you get to break even. And once you get to break even, it's all risk-free from there. So we saw that one, we saw that one. Looking at this one, another break-even trade. There's just so many of these. Here's a buy trade. I like to show the buy trades too. We move above the trend line on price. This is in June, July of, 2009, 2010. We move above the trend line here. We go inside the cloud at $530 a share. We move to break even once it gaps upward at $600. So we made a $70 gain in a $530 stock. It's a fantastic move. We're not even done with it yet. And for those of you that know these candle patterns that Steve is teaching you, you see this doji up here with this long wick down, or you see a doji up at the top, and then you look for a reversal signal or any other number of things that we're going to look at in a few moments, and you get out. But the gains are substantial in exchange for the risk that you're taking initially. Once again, here we go. A move above the trend line on price in the middle of your screen here. A move above a trend line on balance volume. And it's immediate entry because we're already all the way through the cloud at the time the trade is taken. And this is an entry at about $550 a share. We move $100 higher on a $550 stock. We're going to break even once we gain 5 or 10%. That's why you see the blue arrow where you see it now. And we move to $660 a share. And it's not even done at that point. But at that point, you've made so much money. I don't know what in the world you're even thinking. Now we have more charts. We have bank stocks, short-term charts, penny stocks, billion-dollar stocks, IPO stocks, you name it. This is going to work across the board. Have questions about the settings for on-balance volume. The number one question I get in every webinar, what are my settings for the indicators? You'll take the on-balance volume and use the standard settings that come up on your chart the moment you load the indicator on your chart. You don't make any change at all. Barry asks, do I have an audited track record? You had better believe it. Been doing it for 12 years and absolutely positively have an audited track record. I spent years trading as a commodities trading advisor, registered and regulated by the NFA and the Commodities Futures Trading Commission. And flat top Kumo, short explanation, please. Can I buy your ebook? You can have it for free, actually. You can go to my website later on after the webinar, and you can just have it for free. You don't even have to buy it. On balance volume has no setting. That's perfect. Steve, if we could make it as clear as possible, on balance volume needs no adjustment and needs no setting, and it's a standard indicator in most people's standard charting platforms under the custom indicators or under the volume indicators. Neil says, are commissions included in break-even stop calculations? Well, once you move 5 or 10%, if you've paid commissions that are equal to 5 or 10% of the value of the trade you took in the first place, then you're absolutely positively in trouble. But yes, the answer, to give you an honest answer that's not so tongue-in-cheek, yes, they're included. Absolutely. Yeah, you either use on-balance volume or you don't use it. There are no settings. You get a bonus point for saying that, Kay. Thank you very much. Paul says, is the break-even price our entry price or where it comes out of the cloud? It's our entry price. That's great. If you have only 2 settings on Thinkorswim for the cloud, set your first 2 settings, just double them. If your first setting is 9, make it 18, and your second setting is 26, make it 52. Anthony Robinson asks if I have an example for Forex. I actually have a 60-minute webinar recorded and available to you at the conclusion of this presentation for Forex, and I'm going to show you both of those webinars. We've recorded this one, and I have a full presentation on Forex as well. Everything that you're looking at now applies directly, and I have a full recorded webinar that you can view right away. So, this is great. Juan Doe says, freestockcharts.com is seamless for setup, and it's free. BA Trader asks if this is available for TradeStation. Yes, just Google Ichimoku Cloud TradeStation. It's totally available. I run it on TradeStation myself. Here's Apple. I've got to look at more examples. I can't stand not looking at more examples. I'll answer questions as we go through these examples. You want to see buy trades? Plenty of buy trades. Absolutely, absolutely, absolutely. If you can't get it to load on stock charts, Vichy, just go to tradingview.com, load it up. It's real time. You don't even have to pay extra for the data. It's fantastic. It's got everything that you would ever want to need. You can save the charts and share the charts. It's so awesome. I can't believe it. All right. On this chart for Apple, this is the daily chart. We break above the trend line on price and go inside the cloud at approximately, and you're going to die when you see this. This is 2009, and this price is like $92 a share. Boy, if you and I could buy Apple at $92 a share now, would that not be the greatest thing ever? That's going to be a $1,000 stock in the next 3 years. All right. Number one, that's a buy trade on the entry into the cloud because we've got a break above the trend line on balance volume. We've got a break above the trend line on price. We enter at 90. It rises to 106. We've moved $10 on a $90 stock. Yes, you have paid for your commissions easily on this trade. You're up at the top of the cloud, you move to break even, and then you just ride that mofo. You just ride that as far as you can go on that thing. How do you get out of this? Here's how you get out of this. Number one, you look for a candle pattern that you learned from Steve. There is nobody better in the business that's going to show you a reversal for taking profits. It's the best. I can't beat that. I can't beat your own instructor that you have here guiding you along the way for this. I can't beat him. If you haven't already done it, you need to get whatever he has because it's going to make a big difference. The second thing that you can do is you can look for historical levels of recent support and resistance. And we're going to take a look at that in a few moments. Apple, daily chart. Let's look at a trade in the other direction. Nobody shorts Apple, right? Ever. Wrong. People short Apple all the time. People that don't think that you can short Apple are dumb. Of course you can short Apple. You can short anything you want. People said you could never short Enron. For all we know, there's small Chinese slave labored children sitting inside of your retina display, and they only call it a retina display because they poked out the eyes of their slave factory workers. We don't know. We don't know what's going to happen with Apple. It might be found out that they stole all your credit cards and everybody stops buying stuff in the iTunes App Store. You don't know that. Nobody knows anything about these companies. You think you know them, but you really don't. So is it a good company? Sure. Do they make beautiful products? Absolutely. Do we never want to sell this stock? No, that's stupid. Of course we want to sell that stock. If it shows a signal, we're going to follow an objective set of rules. And there's only 3 rules to follow. We break below the trend line on price at the top. I took this trade together with Scott Welsh, who teaches a course with me, and we just about blew the tops off of everybody that we're speaking to. They thought we were the stupidest people in the world. Apple was just about to announce some new line of products. I don't know, new iPad or blah, 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 blah. And, of course, Apple still fell anyway. It still fell through the cloud. Now, it stopped in the middle of the cloud in this example, but then it just raced downward from here. Here's the entry. A break below the trend line on price. A break below the trend line on balance volume. A touch inside the top of the cloud at $560 a share, and the break-even price is going to be $511 if it can get there. Of course, Apple can never get there, right? No, ever. Apple can never get there. Apple's the greatest company in the world. It's the embodiment of every spiritual prophet that has ever walked the earth. Blah, 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 blah. Here's Bank of America. This is a 60-minute chart for those of you that want to trade in the shorter term. So those of you that want to trade on the shorter term charts, let's enter the vortex right now. If you want to go to my website, if you're just dying to go to my website and look at my website, you can just go to robbooker.com. It's super easy to follow. Don't look at Google images for Rob Booker. I was young and I needed the money. There's nothing I could do. Here's a 60-minute chart for Bank of America. Once again, recently, a lot of people that I spoke to thought that Bank of America was the shittiest stock on planet Earth. They thought, man, that guy Brian Moynihan doesn't know anything about running a company. They bought Merrill Lynch. They paid too much for it. They're a bunch of idiots. They bought Countrywide Mortgage at the top of the market. What a bunch of morons. What a bunch of stupid, idiot people. Well, I bought Bank of America on the 60-minute chart when it broke above the trend line on price. Steve is already looking at this beautiful doji-type looking candle at the bottom of the chart right here and saying, Rob, you waited too long to enter. And I'm going to admit that he's absolutely right. We make a great team. You get a break above the trend line on price, an entry into the cloud, a break above on balance volume, boom shakalaka, woo, 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 $7 a share on Bank of America, and it moves up. As we talked about, it moves up the full 10%. It's even going to go higher than that, and it did go higher than that. What a great trade that was. It was a whole lot of fun as well. This is Broadvision. I don't know what the hell Broadvision does. I don't know anything about Broadvision other than they had some volume, and their name is Broadvision. Here they are breaking down below a trend line on price, entering the top of the cloud. move to break even as soon as we hit the bottom of the cloud. We could move to break even after the cloud if we move 10%. This whole business begins at about $40 a share, and we drop down to $25 a share on the 60-minute chart. It takes about a month, and once again, it loses 40% of its value in the course of a month. It's so awesome. And you know what? This fell way further from there. This stock lost a ton of volume. They must have been murdering puppies in their factories. I don't know what they were doing, but whatever they were doing, it was not good for the price of their stock. This is Kit Digital, which I'm positive made David Hasselhoff's car in Knight Rider. I know that's not true. Just, disclaimer, that's not actually true. Here's the entry on a break below the trend line on price and a touch inside the cloud. Boom, shakalaka, waka, waka, waka. $14 a share. We drop to the bottom of the cloud and move to break even. By the time we get all the way down, we've moved down $4 on a $14 stock. I don't know when you can have that much fun on a daily chart. Here's a chart for Nike, 5-minute chart. You want to trade short term? You want to be a short-term trader? You want to trade weekly options on Nike? That sounds like a great idea. Entry comes on a break below price on the trend line. You get an entry. That comes at about $109 a share. We move to break even when we hit the bottom of the cloud at about $108 a share. Not much of a move down. And then we move down to about $107. This is a 5-minute chart, remember. So this is all happening over the course of one day. And you're going to get a move of about $3 on a $109 stock. So you're going to get a 2.5% move in one day. That's going to move upward or downward. Same deal. Either way, whatever you like. Here's a move upward on Bank of America on the 5-minute chart, and this is a stop out. We get an entry on a break above the trend line and a move inside the cloud. And we stop out because price goes down below the lowest point that it went in the trend so far. That stops out. And so I want to take a moment, and I want to talk about revenge. Kay has a great point. Scanning for these trades is easy. I scan for these trades every day and publish these trade alerts on my website. And you can do a free trial. But that's not the most important thing. There's nothing wrong with revenge. It's another myth. If you think that profitable traders don't seek revenge, then you're absolutely wrong. Revenge is a perfectly natural human instinct. When you give into it and you wreak havoc when you're wronged by the market, you're doing exactly what animals do in the wild. If you're an animal and you're a lion, and I showed this chart at the very beginning, and you're a male lion, and you spent your whole life growing this beautiful mane, and you want to breed. You want to spread your DNA. And another lion, male lion, comes up to you, and I know we're using the example of men, but women are way better at this anyway, but let me just give you the example anyway. So we're not sexist. I'm the least sexist person in the world. And so they fight over the territory. They fight over the right to do this. They fight over this. When her cubs are attacked, doesn't stand by and watch as her cubs are attacked. The law of the wild is you take what's yours and you get it. You don't make excuses for it, and you don't apologize for making money. You never apologize for making money, and you never apologize for doing something nice for yourself. Ever. Ever. Not in a billion, thousand, trillion, gazillion years. Ever. You never apologize for it. So when Bank of America stops you out on that 5-minute chart, you draw your trend line again, and you re-enter that trade, and you kick it in the teeth. Because you got to stop out, and stop outs are rare in this methodology. So you kick it in the teeth. The next time around, you don't have to increase the size of your trade. You just take the next entry, no fear, no remorse, and no worry. So they took a stab at you. The market tried to take something from you. Well, you get it back. You take the stop out, you take your loss, you accept that you didn't do well on that first trade, it breaks above the price trend line, it breaks above the on-balance volume, and then you smack this thing upside the head. You move to break even on a gain of 5 or 10%, and then you ride that as far as you can go. You enter at $6.90 a share, and then you jump up to $7.70 a share after that. All right. Get back on the pony, says Juan. You're absolutely right. All right, here you go. NASDAQ, Zynga. I don't even know how to pronounce this, but if you want to play Farmville with me, then I want you to travel back to 2009 when I thought that was cool. Makes all of their money from Facebook. which is all probably going to deplete. This trade stopped out. We had an entry on a break below a trend line and an entry into the cloud with a corresponding drop below a trend line on balance volume. We never got to break even, but we got close, and then it rose up and it stopped us out. That's perfectly fine. So our crops died or whatever. Come back right after. 60-minute chart. Zynga breaks below the cloud again. We move to break even on a gain of 5 or 10%, and then we see if we can ride that sucker even further. I'm not sure how all those stocks are going to do, but IPO stocks from the last year are fantastic. Absolutely spectacular. IPO stocks are absolutely brilliant. Here's Tesla. They went public last year. 5-minute chart on Tesla Motors. I really want a Tesla S. I think those cars are magnificent. I live in California. We all think that's a good idea. Here we go. Draw a trend line across the top of price. We have an entry when we break above the trend line and break above the cloud, inside the cloud, an entry at about $27.80 a share, and then it rises up. We break even when we've made a gain of about 10%, and then we ride that for as long as we can go. As far as we can go. This is a 5-minute chart, so this is a short-term trade that you can take on a stock with plenty of volume, short-term trade. You want to be a day trader? Fine. If this were a currency pair, it would be absolutely indistinguishable. The trade would look exactly the same. You want to trade wheat, corn, gold, feeder cattle, peanut butter? I don't care what futures contract you want to trade. Same principle applies as long as you have the volume necessary to get in and out of the trade. You want to trade longer-term charts? Tesla Motors 4-hour chart. We get an entry on a break below the trend line, inside the cloud, move to break even when we drop down below the cloud, a gain of at least 5 or 10%. We have a break. I don't know why this circle is over here. It's supposed to be over here. And then we see if we can ride this lower. I hate selling this company because I love these people because they make these electric cars that I think are absolutely glorious. All right. Let's take a look at charts without any circles, any trend lines, anything on here. And can you see the trade? Take a look at these charts and see if you can see the entry, the break-even, and where you might take profit. Here's the S&P 500 ETF, the SPY, the whatever. I look at this every single day. This is a 5-minute chart, so you can trade this short-term if you want. You could trade the ES. You could trade the YM if you're a Dow Mini or an S&P E-mini trader. That would be spectacular. It would be glorious. You could absolutely do this on those financial instruments. See a break above a trend line here, an entry into the cloud, a move to break even, and a straight shot upward. A nice, giant move upward. Do I switch between logarithmic and arithmetic scaling? No. Taz wants to make a note that options would kill with this method. And Taz, you are absolutely right. This year on TFL 365, which is my website, we've only made 5 options trades. They have been gigantic winners. They've been, and I don't say that about all my trades. You know, I had a good year in Forex. I had a good year. We had some losses and we had some wins. But options, we killed it. We killed it on options because we're buying out-of-the-money options with a reasonably near-term expiration date and expecting a lot of movement, right? So if it's a near-term option, anyway, you get the story. It's just awesome. All right, here's a Cisco Systems daily chart. You want to buy a put on Cisco and watch this thing drop through the floor. 2012. This is a current chart. This is a trade that I set up and planned and watched right as it did everything that you can see on the chart right here. I would love to review right now how to set your stop loss. Your stop loss goes above the highest point reached in the midst of creating the trade that you're looking at right now. So if it's a sell trade, it goes above the highest point reached recently as the trade set up. And there it is. That's your stop loss. On a sell trade, on a buy trade, your stop loss goes below the candles, the lowest point reached. I just put it below. I don't want to say that not a lot of these lose. Of course they lose. Of course trades lose. I just put it below. I don't make a big business out of it. I don't make a big stink about it. I don't go 2 ticks or 5 ticks or 10 ticks or cat ticks or jiggerbugs or whatever. I don't care. I put it below the low. I don't worry about it. I don't want to be in the trade if it goes below the low. I want to be out of the trade and setting up a new trade all over again. That was Cisco Systems on the 4-hour chart. Here's Cisco Systems on the daily chart. Here's Nike on the 1-minute chart, breaking above. And this is actually a trade that set up just the other day. Nike on the 1-minute chart, breaking above the trend line on price, into the cloud, a break above on-balance volume at about $101 a share. That's what a trade looks like right when it's about to happen. I've had the greatest time of all time. Don't leave the webinar right now because here's what's coming next. In the next 5 minutes, I'm going to choose a random person and have a 30-minute Skype call about your trading systems, about the Ichimoku cloud system, and apply it directly to your charts. So stick around. In the next 5 minutes, I'll choose a person at random and give you my contact information and declare you the winner. And I will contact you and have a 30-minute conversation on Skype. We'll share our charts with each other, and then we'll dive deeper into this method or talk to you about anything that you want to talk about. You want to talk about your marriage breaking up or whatever? That's fine with me too. All right. Here's the offer. In a minute we'll do the raffle, but I want to share with you an offer. I want to share with you what hundreds of my friends have done to finally trade for a living. And I built a platform to share with you their stories. You ever wonder what the stories are like from people who really trade for a living? You wonder what they're trading like, how much they're trading, how often they trade, what their account statement looks like. You ever wonder what it's like to really trade for a living and wonder if anybody really does it? There's nobody out there presenting you the names and addresses and faces of these people. Well, tonight I'm going to do that actually. At the end of this, I'm actually going to do that. And I want to tell you, I built a website to do exactly that. It's not like any other website that's out there, and it's not even going to ask you for any money, actually. What do I want from you tonight? I don't want anything from you. Do I want $1,000? Do I want $2,000? Do I want $10,000? Of course I want those things, but I'll make that money for myself. I don't want anything. You can actually do a free trial of the website where I share with you the stories of people who trade for a living, share with you their personalities. I introduce you to them. Rob Wilson and Jennifer and Scott Welsh, people who've made... Scott Welsh made $58,000 in 2009, for example, just off the top of my head. How did he do it? What did he do? Does he have account statements to prove it? Can he show you what he did? What's the schedule that he keeps? How did he know when to quit his job? What's his money management technique? How often does he trade? What's his risk management theories? Does anybody out there ever answer these questions in an honest fashion? Well, there's a place that you can do that now, and you can do a free trial of TFL 365. You go to robbooker.com right now. You click on the link on the Rob Booker page, and in particular and only for Steve and the rest of the people here, I've left up the free trial link for a short time longer as an expression of my gratitude. You can check out the website. But that's not all that we're going to talk about. TFL 365 also includes daily trade alerts on the system that you showed today on stocks, futures, and Forex, webinars, and lessons every day for a year on how to trade for a living. In fact, if you go to the web, and we go to robbooker.com, and I just bring up here TFL 365. I'm going to show you the website right now, really briefly, and then we're going to do the raffle. I'm not going to bother you with this. TFL 365 is daily trades and lessons for traders. TFL 365, for every day of the year that you're a member of TFL 365, you get a lesson delivered to you every day. How to be a self-transformational individual. What happens when you overextend yourself as a trader. How living more simply makes a difference. How do you get it all back if you've had a giant loss? How do you get it all back? What's the quickest way to get it all back? I do a video and a presentation on how to get it out. The promise of creation. How people create trading systems. The art of war and trading. Rob Wilson, a commander in the British Royal Navy who trades for a living and is a CTA and shows you what he trades and how much he makes, talks about how time, force, and space make a difference. Everything should make you money. Every single thing that you do as a trader should make you money. I even have a lesson on the microeconomic trade, how to apply economic fundamentals to the news, to the trades that you do in the market. TFL 365 is all about making money. It's all about sharing with you the stories from traders who make money every day, day in and day out. All right, so you can get a free trial. I don't want your money. I don't want you to sign up for it. And even if you do stay on, it's $37. So I'm not even, there's no pitch here for any substantial amount of money. I'm not here to take your money away from you. I genuinely want you to take a ride on TFL and see what this thing is all about. Raffle. Here's the raffle. Here's the question. I'm going to accept any answer that I deem to be the best answer, that was the most enjoyable answer for me to read. Who was the first president of the Swiss National Bank? Submit your answer. Yeah, $37 is like one stop at Starbucks. Someone said Rob Booker. Charles Hashem said Rob Booker. Al Gore. Mr. Cheese? A cheesehead? Sigmund Rhee, the Pope, Rothschild, Bajor Borg, the guy who started the bank, Bernie Madoff, Alan Greenspan, Swiss Miss, there wasn't one, Madonna, Alan says, oh my gosh, the one who was the president says Lonnie Adams, James says the Pope. A lot of people are saying the Pope, Thomas Jordan, Lady Gaga. Mel, you win. Mel, you're the winner. That's great. Mel, you're the winner. So, Mel, you said, Lady Gaga. Mel McWhorter, send me an email to this address. Everybody can see my address. It's perfectly fine. Mel, send me an email to that address, rob@robbooker.com, and I'll send you information on setting up a private phone call with you, and we'll take a moment to spend some time together. Here's what you do next, everyone. My settings on the Ichimoku cloud were 18, 50, 52, and 104. And what am I going to do right now? In the next few moments, I'm going to set up a live Google Hangout. Follow that link on robbooker.com to TFL 365. So click on the link on robbooker.com, and I will answer questions about the Ichimoku trade. I'll share more charts. I'll talk about TFL 365 and take your questions about trading for a living. But before I do that, Steve, let me turn the time back over to you, and as I set up that little presentation off to the side, I'll let you conclude things.
Rob, thank you. This has been great information, and this is exactly what I tell people: is you take somebody's information that they've perfected and try to learn it, even though you might not trade it that same way yourself. Incorporate it into your trading. Anything that you can do that can add the probabilities of being in the right trade at the right time is going to improve your trading. And so, Rob, that's a fantastic offer you've made. We've been pushing the 12 for 12, and you beat that. Jeez. So I would suggest everybody take advantage of this offer. It's a good way to learn about the cloud. And as a matter of fact, I was going to eventually research it and present it sometime out in the future. But I think Rob's already done that and perfected it much better than I could ever have done. So,
really kind of you.
Thank you, Rob. I'm very pleased with our association. And I think the combination of our information is going to definitely help people be in the right trades at the right time.
Well, I'm super happy to hear you say that.
With that, yeah, is everybody switching over to Rob's link?
Yeah.
I take it you're going to continue to answer questions over there?
Page, and Steve, if you don't mind, I will send everybody what that looks like. And turn the... Hi, Jennifer. So I'll show everybody what this link will look like right now. If you go to, just so you know, if you go over to the TFL link that is on that page and press this button right here, if you refresh the page if it's not there, and you will see on that page a live presentation where I'll answer questions. I'll show my charts. If you're a Forex trader, I'll show some charts from the world of Forex. And I can answer more questions and take your questions. And I'm going to actually introduce you to Jennifer, who is a former student of mine and trades also and has been very successful. So it's all part of my effort to introduce you to folks who trade for a living, who really do it for real. And you can find it all if you go to robbooker.com right now and follow that link to the special offer for Steve's students. It's been a pleasure to be here, Steve. Thank you so much for inviting me. I had a real great time being here.
So, Rob, thank you. It refreshed and it taught me a lot of stuff that I will probably start looking at myself. Again, anything that can improve the probabilities of being in the right trade at the right time is what I want to learn. So thank you for the presentation, and I think we'll probably have you back again here, not too distant future.
Okay. That's great. So, everybody, you just click on the main link on the robbooker.com homepage, and if you can't find the link, go to robbooker.com and click on the main link. On the link in the center of the page. And Steve, if you don't mind, I'll put up a slide that shows that link just so everybody can get it.
You do what you want
you
to.
TFL365.com, click on free trial, or you can click on robbooker.com, and you can click on the link in the center of the page. So if I go to robbooker.com right now, for example, I will show you exactly what you will look for. Oh, that's not loaded correctly. No wonder you can't find it. Let me load that up correctly for you all. I understand why it's not loaded correctly. All right, here we go. It will just take me a moment. I'm so glad that somebody pointed that out. And it will just take me 1 second here to do this. I should have had that done beforehand. Alright, let's go over here. And sorry that it's taken so long, everyone. Give me a moment here. There we go.
That's all right. I'm still looking over all my notes and letting all this sink in. This is
all right. Here we go. There it is. That link is up there on robbooker.com now, Steve.
Okay, great. Rob, thank you very much.
All right.
Everybody.
Thanks, everyone.
Hope you enjoyed this presentation as much as I did. So we'll see everybody in the chat rooms. Thank you, Rob.
Right. Thanks.